Hello and welcome. My name is Melissa Galasso, and today we're going to take a deep dive into SARS 27.
Which is now finalized, and it does have some pretty big implications, particularly if you have a CAAS practice. So CAAS services is actually one of the fastest growing services provided by CPA firms. And so this was something that was very near and dear to many CPA firms with the area focused on preparation engagements in particular. So SARS 27 was issued in 2025, and it is the applicability of AR-C Section 70, which is preparation of financial statements, to financial statements prepared as part of a consulting services engagement. And so when we take a look at this, there were questions around how AR-C Section 70 was applying to controllership or CFO services as part of those CAAS services that are performed really under the consulting services, and then we are creating a financial statement as part of that. So if you're doing the client accounting services and as part of this, you prepare the financials, there were questions as to whether AR-C Section 70 would be appropriate to follow in that scenario. And there was a lot of back and forth on this determination, but ARSC determined that excluding the engagements wouldn't impact the public interest because preparation isn't in a test service at the end of the day anyway. So we're not giving any assurance on it. And so no assurance, no attest, we're not issuing a report. So they didn't feel like that would be a difficulty to remove that, because there are lots of other services that when you do a financial statement as a byproduct, that you get an exclusion already from preparation. So if this is just a byproduct of consulting, then they didn't see why this would be a big deal. So let's take a look at this. Obviously, it's impacting the scope, and there's some changes around language in particular that we would have to pay close attention to. So one of the things that it's going to do, and it clarifies, and is not engaged to perform an audit, review, or compilation service, right? So it's not part of the of the actual financial statement attest services that we are providing. In that scenario, you are not required to apply them. So the scope used to say this section does not apply, but now it says this section is not required to be applied, but application is not precluded. And then they added in whole or in part. And we'll talk about why that's so important. There's actually a comment letter that I was a part of that made some suggestions as part of the due process that actually ends up in the exposure draft. And when it gets into the exposure draft, it's going to be that in whole or in part. So again, when we talk about does not apply, it's not saying you can't use it. It's saying you don't have to use it, right? Is not required to be applied. And so in this scenario, you can see originally the engaged review or compilation was a first bullet in the type of engagement. Now it's part of the actual scoping document, and then we have the types of engagements. And so they added letter B here as part of a consulting engagement performed in accordance with CAAS Section 100 consulting services, in which the preparation of financial statements is not the primary objective, right? So it's not the goal of preparing financial statements. It is a byproduct or ancillary part of the work that's being done for that consulting service. B, as part of the personal financial plan performed in accordance with the PFP section. And then as part of an engagement to estimate the value of a business, business ownership interest, security, or intangible asset in accordance with VS Section 100, which is part of the valuation services, valuation of a business ownership interest, security, or intangible asset. So you can see a little bit of movement here. They actually moved the inclusion in a written financial plan. Instead of just talking about the financial plan, it's actually being done in accordance with another type of service, and we're referencing that service. And then we added that business valuation consideration, again, as an explicit citation, as opposed to the bottom line that was removed, which was just generic in conjunction with business valuation. So when you're using these other guidelines to do something, and this is sort of a byproduct, then in that scenario, you're going to follow the traditional services. So Mike Glynn, who heads up is the AICPA liaison to ARSC, he is an AICPA associate director, he stated, and this is from a Journal of Accountancy article, the practical difference, right? Why do we care? The practical difference for CPAs is that if they perform the engagement outside of AR-C Section 70, so they don't follow preparation of financial statements, the quality management standards do not apply. and the engagements are not included in the population subject to peer review. So basically, we're pulling a whole bunch of entities who maybe only do this sort of client accounting service. They only do preparation as a result of those services, and they were under quality management. They were subject to peer review in some scenarios. Now, because it's being done primarily under the client, under the consulting services, they're not going to be following AR-C Section 70. Therefore, they're not subject to quality management nor subject to peer review. So this is really the outcome, and I think it's the best statement of it because it's kind of implicit in the standard, but if you don't know the rationale for why the standard was even looked at, then you would not necessarily come to that conclusion. So this is probably one of my favorite quotes on why do I care about this. Now, there were some questions in particular around around consulting services in particular, because there's not a lot of guidelines around financial statements within the consulting services if you look at the type of consulting services that are in there. But the consulting services do recognize, obviously, professional standards around competence, due professional care, planning and supervision, and sufficient relevant data. But more importantly, it does require them to follow the AICPA Code of Professional Conduct. So all the ethics and independence obviously applies. One of our most popular classes has been independence for CAAS services. When you are providing CAAS services to an attest client, what can you do? What can you not do? And it's kind of interesting because AR-C Section 70 is part of the ARCs, right? It's part of SSARS. And so there was a little bit more wiggle room. When you move into consulting services, it's clearly a non-attest service, and there's a little bit more that has to be documented around that. So very interesting sort of allocation. Now, obviously, you would not follow AR-C Section 70 for your preparation if you were doing an audit, right? So if you're doing an audit, AR-C Section 70 does not apply because, again, you go back to that scoping. The primary objective is the audit, and it's just a non-attest service. So when we're looking at these types of items, I think it's really important to recognize why independence rules are so important, which is what we talk about in our independence classes. However, again, when we think about this, the determination of whether someone's been engaged to prepare financial statements or assist in the preparation, again, when we talk about more like bookkeeping service, is a matter of professional judgment, right? So again, when we think about this, the accountant must apply professional judgment in order to make this determination. And again, some verbiage changes there. Instead of requires the accountant to apply, just says that it requests the accountant to perform and the accountant's professional judgment. So again, in this scenario, it's still just a judgment call. But let's talk about voluntary application. So it talked about in whole or in part. So maybe you don't want to follow all of AR-C Section 70, but maybe you want to put something similar to what we have in the preparation standards that indicates that no assurance is provided. Right? Maybe you want people to know that, yes, a CPA firm did this, but no, we're not giving assurance on it, which is one of the things that we do in the preparation standards under AR-C Section 70. Obviously, when we're preparing financial statements as part of the audit, we are giving assurance, and so we don't add that label. But when the only thing we're doing is AR-C Section 70, and we're just preparing the financial statements, we don't want someone to think we did a review or we did a preparation, because we're not issuing a report, right? Preparation is a non-attest, no assurance service. And so as a result, if there's something in AR-C Section 70, you're not precluded from using it. So again, that not precluded versus is not in scope was a very big change here. And the content was in the suggested, in the comment letter, was around this concept of, hey, how do we let people know that we're not doing this if we take it out of AR-C Section 70? So it does say that, again, you can voluntarily apply certain requirements in which this section would not apply. So again, if you're following the consulting services, but you do want to use paragraph 14, where we say no assurance is provided on the financial statements, that would be okay. That inclusion does not result in the accountant being required to perform the engagement in accordance with 70 and would not have to apply any others. So you're just selectively electing that additional language, and that's not going to make you subject to peer review. You're not going to have to follow the rest of the standard, right? So you can select a piece of it and it would still be okay. So remember, consulting services differ from the typical CPA function of attesting to assertions of other parties, right? In a consulting service, the practitioner can be developing findings, conclusions, recommendations, and the scope of work is solely in the engagement letter, right? So what did we agree to between the practitioner and the client? Generally, the work is performed only for the use and the benefit of the client. And if you go way back before SSARS 21, we used to have management-only financials, and we got rid of that in SSARS 21, which is always a hot topic and confusing to people. And so if you really were doing just management only, right, this is a consulting service would make sense for application purposes. So when do we have to do this? The effective date is for the preparation of financial statements for periods ending on or after December 15th of 2026. However, early implementation is permitted. So if you want to move out right now, you absolutely can do that and move things into the consulting services and find yourself outside of the preparation engagement services and therefore outside of quality management, which is effective later this year. So again, it's a good opportunity for firms who think this is going to be better for them in the long term. So again, small standard, but important, especially if you are providing this ever-growing area of CAAS services for your clients.
All right, that's a wrap on SARS 27. I look forward to seeing you on a future Nano Learning. Have a great day, guys. Bye-bye.